All right, so Tesla is tanking after hours. They just announced earnings. What exactly happened? Let's go through the details. In yesterday's video, I had shared that the expected range or move for Tesla earnings was about $22 to the upside or downside. And I got this number by taking the at the money calls and the at the money puts and basically sandwiching them together, add them together. That's the market telling us what the expected range is for the stock between now and the expiration of those options, which is Friday. Now, most of that value, though, is inflated to earnings, so you could kind of use it as an earnings range. So, given the stock closed around 374, that puts a range to the downside to about 352. Now, very interesting, check this out. Tesla came just about to the bottom of this range and then bounced. I wouldn't be surprised if we stayed within this range tomorrow. You're also going to see just a massive, huge IV crush in both the calls and the puts now that the event is out. So what happened with Tesla earnings? Well, they actually beat on revenue by a lot, a couple billion. They made more money than the street was expecting, but they spent a lot more. So while the street was expecting an EPS of around 50 cents, they came in at 33 cents. Now, when I look at our fundamentals tool here, there's a couple things that kind of come to mind. First, on earnings, is that earnings have been declining here from an EPS standpoint. And again, while the street thought they're going to come in around 50 cents, well, you can see this is going to come in closer to about 33 cents. So EPS is coming in, but how does that make sense when revenue is increasing? They grew revenue 26%, I think, year over year. This is the first time that in a 12-month trailing time frame, they did over 100 billion in revenue. So revenue is still going up, but EPS is compressing. That just means that they're spending more, they're investing. Okay, so tomorrow and throughout the rest of the week, rest of the month, this is the number to watch, 370. This is that shelf that we're basically staying above. And I think that as long as we stay below 370, there's going to be pressure on the stock. And I would be, cautious trying to get into Tesla below this level until you see a confirmed reversal or the MACD switches back over, which has been confirmed already to be a fantastic momentum gauge. This downward pressure also existed throughout the day on SpaceX. You can see it here. We basically had a high of around 124. It came as low, can you believe this, as 114. It just dropped all day. I'm a big believer in the Heikin-Ashi chart and the MACD. You really don't want to bet against these momentum indicators. I think it's the single best way to trade, works across time frames, 1 minute, 5 minute, 30 minute, daily, weekly. The Heikin-Ashi and MACD are the way to go. The last thing I want to cover here are the Qs. The Qs are seeing some pressure here after hours, but more importantly, I'm going to hop over to the daily chart. Check this out. The daily chart, the MACD has already been crossed the bears basically since the beginning of June. We're now almost through July. Seasonally wise, if we look at our seasonality here, this is kind of cool. Seasonally wise, July is actually the most bullish month of the year for Apple, for technology. This year, though, Apple's up, but the Qs are down 4% in the most bullish month of the year. They're down. It's basically down and compressing sideways. The MACD has already been bearish here for a while, a month and a half. But here's what I'm watching very closely. You can see that there's a bit of a shelf that's formed right across here. We'll call it 710 on the Qs. I think if the Qs stay below this level, we're going to see a lot more selling pressure. Now, if we can get above here, watch for a big bounce. This is kind of like my over-under area. I'm bullish above it. I'm bearish below it. But here's another reason for that. The momentum to the downside is actually increasing. Now, I can see this in the MACD and the momentum indicators, but here's an easy way to see it as well. Here's your resistance. Here's your next resistance, right? It's coming in steeper, right? You can see that. And check this out. If this turns into a high, I mean, it's coming over, folks. You could also see this. Check this out. On the weekly, look at the MACD. Does this look like a market that's ready to bounce and be super bullish? Not really. It looks more neutral to bearish. Now, the last time the MACD did this on the Qs, it basically sent us into this kind of trading right here, which was basically several months of compression, and finally we had a little bit of a capitulation before a big bounce. The last time was this one, right? which was, again, a little bit of compression and then a big pullback. Pretty much every major pullback in technology in the market happens when this MACD is keeled over to the downside. If I could kind of take one big picture away from this, it's that there's easy times to trade and there's more challenging times to trade. Sometimes you get the layup, and that's when all the momentum signals are going up. You could basically throw a dart at the Qs. You're going to make money. Everything's rising. And then you have the more challenging part of the cycle. This is the compression. This is the chop. This is where it gaps a lot. And your momentum indicators are going to look like this. So if you're still expecting these massive gains in technology like we had earlier this year, well, you just need to readjust your expectations. That's just simply not where we are in the cycle of things. Okay, so I hope you enjoyed this video. I'll do another one like it tomorrow. Have a great evening, everybody. Trade safe. We'll see you then.